how many stocks should I have in a portfolio? So today I'm going to address this question. Hi, welcome to the Ask Dr. Well series. So you know that we run a lot of investor education and we receive a lot of questions from the students. And one of the most popular questions of all is, how many stocks should I have in a portfolio? So today I'm going to address this question. I'm Alvin, the founder of Dr. Well. So let's begin now. And let's imagine there's two persons, investor A and investor B, alright? And say investor A only have 5 stocks in his portfolio, while investor B has 30 stocks. Okay? So you can say one is more concentrated, while B's portfolio is a lot more diversified. Alright? And imagine they equally weight their portfolio. Okay, so which means for A, each stock represents about 20% of the portfolio and B is about 3%. Okay? So in this case, right, a lot of people would think that having 5 stocks is better than having 30 stocks, because having 5 stocks means you have less stocks to monitor, you require less effort to do so. But actually we beg to differ, because for A, in this instance, is that if let's say one of the stock goes terribly wrong and say it's a fraud, so the stock goes to 0, what happens is that A would actually stand to lose 20% on his portfolio. While if B has the same exact stock as A, which went to be a fraud and goes to 0, he will only lose 3%. Which means for A, it is a very unforgiving portfolio. Okay? So, which means A would have to technically do a lot more work to ensure that the stock picks are very correct. Else, he's going to suffer major losses. Alright? So, for a concentrated portfolio, actually one has to do more work than a diversified portfolio. So that's point number 1. And for point number 2, right, is that there are advantages for a concentrated portfolio. And now let's explain that. And let's say we draw a time series here. The vertical axis being the amount of profits, okay, or portfolio value, right? Portfolio value. Okay, and then here is the time series, alright? Okay, and let's say the 0 point is here. So you can either make money or you can lose money in your portfolio as time goes by. So for example, if on a concentrated portfolio, right, you can see that the growth can be very fast, right, on the upside, and it can also be very bad on the downside. Okay, and let's use green for a diversified portfolio. So if let's say you start from the same point, okay, you don't expect the growth of the portfolio to be as good as a concentrated portfolio if they got the stocks correct. Okay. Likewise, the downside is also lesser if they get things wrong along the way. So which means the diversified portfolio, again, you have lower downside, which we have mentioned previously in point number 1, but it also have lesser upside compared to a concentrated portfolio in this case. Okay. So in other words, if let's say you are someone who is willing to go for higher returns, you need to be able to stomach greater risk. Essentially, that's what it's trying to say. So it depends on how you want to see it. So I would say that if you're an experienced investor, it makes sense to do a concentrated portfolio. But if you are a beginner, you should be doing a diversified portfolio. It goes back to the point number 1, that it is a more forgiving portfolio if you diversify your stocks, while it is more unforgiving if you concentrate your position. So I would say if you want to be a good investor, you can aim for a concentrated portfolio. And if you're a beginner, go for a diversified portfolio. And the next question that we usually get is, how many stocks is considered as diversified? So research have found the golden number is actually 15. Okay, so if you have 15 stocks in different sectors and industry, it would have reduced your unsystematic risk, or in other words, stock picking risk by 90%. So anything above 15, you have marginal benefits of diversification. So if you are starting out and you want to buy stocks, I think you should have minimally 15 stocks in your portfolio for a start. Okay, so that's my answer to this question. I hope that you have a greater understanding on portfolio diversification.